The global economy. What's the outlook for 2025? Hello, I'm Mike Walter, filling in for Anna Naidu, and this is The Heat. We're just a couple of days into the new year, and as we launch into 2025, there are many critical questions about how the global economy will perform this year. China, the world's second largest economy, is on an upward trajectory and looks poised to continue its economic performance with high-quality development and advances in technology. The economy in the United States also looks to be on solid footing, but many wonder what impact Donald Trump will have when he takes office in just a few short weeks. To discuss all of this, joining me now from Beijing is Einar Tangen. He's a senior fellow at the Taihe Institute and chairman of Asia Narratives. Also with us from Honolulu is Anthony Chan, a former chief economist at JPMorgan Chase & Company. Joining the discussion, too, is Liang. She is a chair professor in economics at Willamette University, and also with us is Otaviano Canuto. He's a former vice president of the World Bank and is now a senior fellow for the Policy Center of the New South, and we want to thank all of you for joining us, and a Happy New Year to all of you. Einar, why don't I begin with you? Speaking of New Year, we saw the New Year's message from President Xi Jinping. He talked a lot about the economy. He says it's on an upward trajectory. So give us a sense of what we saw in 24, I should say, and how do you build on that in 2025?
Well, Mike, there were a lot of misgivings about what was going to happen, constant projections that, once again, that China would not do well. But at the end of the year, data, as you pointed out, has been very, very robust for China. But, let's put this into perspective with the unknowns about what Donald Trump will actually do. What China has done this year and for many years is to prepare for not to rely on other countries or economies in the sense that they are trying to develop this kind of domestic economy. And by that, this is that dual circulation thing where it's driven by consumption rather than investment. Very important. The thing to watch here as we go forward is that China has more tools in their toolbox in terms of being able to do what is necessary to fine-tune the economy. They've taken a very cautious look at things earlier in the year. This, with Xi Jinping's speech, he made it clear that this was going to be a priority and that they're going to use everything that they possibly can to make sure that the Chinese people do well in this coming year. But not necessarily relying too much on the U.S., more on the global south. We saw what happened at Chanche Port in Peru. Those are the types of things that China is going to be looking for, opening up and trying to create an economy of the willing as opposed to those who see China as a threat.
And Anthony, as we look at the start of 2025, the U.S. economy seems to be on solid footing as well. But the New York Times posed a question in a recent headline, and it goes this way, quote, "The economy is finally stable. Is that about to change?" I think that's a question a lot of Americans are asking, too, because the new president takes office in just a few weeks. And one thing he is known for is unpredictability, a sense of chaos. What are we likely to see?
Well, right now, Mike, what we're seeing is that the Atlanta Fed is projecting economic growth of 2.4% in the fourth quarter, which I think is pretty impressive. Consumer spending growing at around 2.1%. We also know that despite all the things that you've just mentioned about Trump 2.0, one of the things that the president has always favored is a growing equity market. And to have a growing equity market, you're going to need corporate profits to grow. You're going to need economic growth to grow. So despite all the statements and all the noise that you hear, that message is going to be front and center with Trump 2.0. So despite all these threats, my suspicion is that it won't be as bad as some of those threats indicate, because he will want to maintain strong economic growth and strong equity price growth moving forward, since historically he has judged his performance by what the equity market has done. And equity markets, I think most of us will agree, do not want huge tariffs, do not want things that slow economic growth. And that, I think, is something to look forward to.
And Jan, to that point, he's talking about the noise. We heard a lot of noise during the campaign. He said that tariffs, I think he said, was one of his favorite words in the dictionary. Will China's economy be impacted if he goes through with some of the threats he's made about tariffs aimed at China?
Yeah, Happy New Year to you, Mike, and all the panelists. So I think, yes, if that 60% of across-the-board tariffs on Chinese imports does go into effect, and this will be a lose-lose situation, I would say, for both economies and also for the global economy. But as Anna, I think, just mentioned, China has been fortified its economy against this kinds of external uncertainties. When you look at the Chinese trade with the United States, China's, exports to the United States used to account for about 19% of its total exports back in, Trump #1, and now it has gone down to about 14%. And China, for the first time in 2023, has exported more to the global South countries, the BRI countries, than to the, European economies, the U.S. economy, and Japan all combined. So I think, the Chinese economy has been diversifying in terms of export destinations. A lot of the Chinese companies are also going abroad to build supply chain abroad to avert some of this tariff effects. But more importantly, as I think Anna also mentioned, China has been, developing domestic consumption and also investments. I think that is also very helpful, to bolster the domestic demand. So here we already hear some policies that are down the pipeline. For example, 3 trillion yuan bond issuance, and likely to be more than that. Some of this money will be used to, to bolster the trading programs, the large equipment trading programs, and some of the strategic construction programs, but also to continue to support advanced manufacturing and industrial upgrade. And finally, some money will be used for recapitalize the banking system. And we're also hearing, news about raising the salaries for the public servants, and that amounts to 48 million people could benefit from this. So I think a lot of the policies are already being launched and also in the plan, and I think that would really help to strengthen the Chinese economy against any of these kinds of external uncertainties.
Yeah, let me ask you a follow-up about that, because in President Xi's address, he said that we live in a world of transformation and turbulence. Clearly, you see the transformation that's undergoing in China. I mean, it's dramatic. For those who were absent for a while and came in and saw it, as I was, it's just amazing to see what's going on there. But the World Bank's been very optimistic about China and the economy and the growth there. But they do say that there are some headwinds in the property sector. We've heard this over and over again. And also domestic consumption really needs to be ginned up in a sense. Are those still areas of concern, do you think, moving into 2025?
I think so. First of all, I think the positive side, you're right. We're gonna to achieve the about 5% growth target, but more importantly, when we look at the industrial upgrading, right? The NEVs, industrial robots, and some of these solar panels and integrated circuit production, all of these outpace the general industrial output growth, which is 5.8% for the first 11 months, which is impressive. But you're right. I think the real estate market continues to adjust, but we have been seeing some signs of improvements, right? When you look at the new home prices that has fallen in November, but to the smallest pace that we have seen in 3-4 months. You're also seeing, some of these home sales in terms of floor sales and also the values for the revenues. We're also seeing improvements, consistent improvements since May last year. So I think, there are signs that the real estate market is stabilizing, even though that probably still will have a drag effect on the broader economy. But that said, with the trading programs and also with consumer confidence being built up, more jobs, more income creation, some of the cash handouts for the low-income families, and also raising pensions in this year, I think all of this could help to boost consumer sentiments and also help to provide more income support for the consumption growth.
Otaviano, let's focus a little bit on Latin America. Brazil, of course, the largest economy in Latin America. What's the economic outlook look like for Brazil in 2025?
Well, Happy New Year to everyone. 2025, we will probably see a slight deceleration of the growth pace in Brazil. See, the 2024 growth rate surprised all forecasters. The GDP of Brazil grew at a pace of 3.5%. right? Which was above all expectations, as it happened as well in the previous year, in 2023, but with an important detail. While in 23, the surprising growth was due to an unexpected increase in the agriculture production and clearly growth potential above what was expected. In 2024, that was mostly due to a very strong fiscal impulse. And this matters because the economy is overheated. The unemployment rates are below any levels that one might consider, let's say, the tendential ones. And as a consequence, the inflation has spiked a bit. And this increase in inflation has led to an increase in interest rates by the central bank. The central bank has already signaled that it will keep lifting the basic interest rates in the next two meetings. And that's why, in order to curb inflation, it's likely that we're going to have a slowdown of growth in Brazil to something closer to 2.2%, with a decline in inflation. And also because the fiscal impulse will be a little bit lower than what it was the case this year.
And so, Otaviano, let's just broaden this out further. As you look at Latin America, are there other bright spots economically, and are there some areas that are more worrying and concerning?
I guess the mood has changed with respect to, as well, Argentina. Now, most of the forecasters that I know have been working, including multilateral institutions, including the OECD or the IMF or even the World Bank, with an expectation that after reaching the bottom of the pit, the GDP of Argentina might grow something close to 5% this year, 2025. Whereas, as well, an uptick on the growth rate of Colombia, 2.9%, compared to 1.9 last year. Chile, whereas Chile and Peru will feel a bit the decline in commodity price. The great unknown is Mexico, for obvious reasons. We don't know exactly the extent to which Mr. Trump will implement policies that might hurt Mexico. I hope the optimistic take given on Mr. Trump, avoiding the turbulence, Mexico may end up negotiating with Trump something like enhancement of the controls over the flows of migrants, and convince Trump to not establish any hikes in tariffs and so on. And also, one has to take into account that the many producers in the U.S. today depend on the production in Mexico to keep costs lower and so on. So that's the dilemma we'll be facing until after January the 20th, what it is that Mr. Trump will de facto pursue with respect to Mexico.
Yeah, it's the great unknown, isn't it? Yeah. Einar, it's interesting, though. President Biden's not going to be in office for much longer, but today he announced that he's going to block this takeover bid of U.S. Steel by Nippon. He's citing national security concerns for his decision. Are you surprised at this action?
No, not at all. I mean, this is a political battle for the support of the blue-collar workers. First time in a long time, Donald Trump was able to really make huge inroads into the working class. They supported him overwhelmingly. They did by a smaller margin the first time around. And right now, the Democrats, who have traditionally appealed to them, are trying to make it look like they're concerned about jobs. But I want to point out one thing, Mike. During our discussion today, it was pointed out that, equities are going to buoy America. I mean, this is this idea that somehow the stock market goes up and everything is better. In China, as you saw with Xi Jinping's speech, it was about equality, about rising together. And this is a fundamental difference in the outlook of these two capitals. For China, it's all about the people, and everything else is secondary to it. The economic activity is in support of that. Where in the U.S., we tend to look at it as if the stock market is doing well, there will be side benefits that will help everybody. Like we think it's a rising tide helps all. but it's not necessarily working the way it's supposed to in the U.S. There's a lot of defaults on loans. Personal credit card debt is through the roof. And housing starts are not doing where they are. So I'm not trying to denigrate what's happening in the U.S. I'm just saying that there's a fundamental difference in how the governments approach each one.
Well, speaking of differences, it seems like in years past, I saw actually a former Republican from Pennsylvania, a member of the House, who said that he thinks the politics on the Nippon deal are all wrong, that a lot of the workers probably would benefit and that some of them are going to lose their jobs because they nixed this deal. But he also said that foreign direct investment is a good thing. And that used to be kind of the clarion call in the United States. It's not so much now. You do see it in China, and now it just seems like the U.S. is kind of reverting to this protectionist model, whereas China's open for business, kind of a globalization stance. I want to get your thoughts on that.
Well, yeah, I mean, right now the United States is trying to figure out exactly how you get back to making America great again. That's Donald Trump's mantra. Unfortunately, it's a zero-sum game. Everything we gain is going to be taken from others. I mean, it's consistent. We've been an empire for a long time. We tend to take aggressive action against any threats that we see, and we see that our economic viability depends on, in essence, getting better deals from everybody else. For others, it might be that we're taking things from them. And this is, as I said, this goes back to this basic issue. In terms of the Nippon deal, yeah, I mean, this is grandstanding. It's not necessarily about the real economics. It's about, saying to America, oh, we're better at protecting you than somebody else is. But I think it misses the point in the sense that, as you pointed out, that the workers are going to be the ones who suffer from this kind of grandstanding.
Anthony, cost of living issues, pocketbook issues, of course, drove people to the polls, and actually Trump campaigned on these sorts of things, saying, look, I'm going to lower the prices. He also wants to cut taxes. Is he going to be able to do all of that, and is inflation going to be a concern moving forward in 2025?
Well, as you can see, we've made a lot of progress over the last couple of years on inflation since the consumer price index peaked at 9.1%. We now see that the inflation rate, whether you look at the CPI or whether you look at personal consumption deflator, is getting closer and closer to the Federal Reserve's target. I just recently put out some research in a Substack article under the People's Economist and found that if you look at the term premium in the credit markets, it's gone up quite a bit, almost 3x from the beginning of this year. But inflation expectations have barely gone up. They've gone up about 7%, which is really nothing compared to more than almost 300% for the term premium. So right now, interest rates and the bond market are telling you that they expect faster economic growth, but inflation not so much. So it's going to be faster economic growth. That's, of course, dependent and contingent upon what kind of policies are put on. We know that tariffs are inflationary. Some will argue that they're inflationary over the short run. That is, when you impose them, prices go up and then they'll keep going up year after year. But nonetheless, if you impose tariffs and then you impose additional tariffs and you keep doing it on an incremental basis, then you can start making the argument that it is inflationary over a longer period of time. So to the extent that these potential tariffs, which I hope and expect will not be as aggressive as we heard in the campaign, go on over several years, it can be a problem for inflation. And then let's not lose sight of the fact that historically, tariffs, especially when you have retaliation, they tend to slow economic growth in your country. So you get prices to go up and you get slower economic growth. It's not a very good mix for the U.S. economy. So that is why I try my best, and I believe it's justified to remain cautiously optimistic that this potion of both tariffs and retaliatory tariffs will not be as bad as being discussed during the campaign trail, because otherwise inflation will pick up. But to answer your question directly, we know that last mile of inflation is always very challenging, but the good news is we've made a lot of progress already.
But Anthony, one of the things that we see on Wall Street is they look to the White House for a lot of cues, but they also look to the Fed and interest rates. Are they going to cut interest rates? That sort of thing. That's always a matter of concern. So where do you see that going in 2025?
Well, I think you already heard from the Federal Reserve that they're going to cut back on the number of times that they're going to cut interest rates. Right now, the SEP, a Survey of Economic Projections, is expecting that the Fed will only cut rates by 2 times or 50 basis points. They cut rates by 100 basis points last year. So they're clearly going to do a little bit less unless the economy weakens. But so far, the momentum doesn't suggest that. So why are they cutting anyway? Because interest rates are still high relative to their neutral rate that they can afford to cut, but not cut too aggressively, because that last mile could be a bit more challenging. You could argue that inflation at that last mile is a bit sticky. So yes, the Fed doesn't have to cut rates as much, but I think they will cut rates to some extent in 2025, just not as much as they did in 2024. And by the way, it's justified. The economy is not doing badly. If you see the economy growing above potential growth, and potential growth in the U.S. estimated by the Congressional Budget Office around 2%, if you're growing above 2%, you don't have to cut interest rates very aggressively. You can still cut them a little bit because rates are above their neutral rate, but you don't have to be very aggressive as you had to be in 2024.
Yeah, Yan, as we look at China and some of the major economic milestones in 2024, obviously the EV market just shot up like crazy. Can you talk about the global impact of that, and what do you see there in 2025?
Right. So we do see the kinds of industrial transformation of China's economy. So the EVs, the integrated circuits, and also the solar panels, wind turbines, all of these, green products, green technologies have really taken off. So you're right, the EVs has exceeded 10 million mark, right, of production. And by the way, most of these EVs were still sold domestically. So China's, EVs are very well accepted by the Chinese consumers. So over 85% of the EVs are sold at home, and China, of course, account for 67% of the global EV productions and sales. So I think this is tremendous. This is going to help to accelerate China's green transition, but also help to continue, to foster technological innovations and also industrial upgrading. So these are really good news for China. Now, on the other hand, I think, with the exports of some of these EVs to the global markets, including, advanced economies like the European Unions, but also to Southeast Asia countries like Thailand, like Vietnam, or to some other Latin American countries like Brazil and others, these would also be helpful to accelerate the industrial transformation and also their green transition as well. And we all know that, now Chinese EVs are so competitive. So many countries start to erect some of the tariffs to protect their own domestic, EV industries and whatnot. But I think Chinese businesses are going abroad. There's opening factories and battery factories all around the world. So I think this will be helpful for some of these host countries on the one hand to also, have the technological sharing, help them to develop their EV industries, and at the same time accelerate, their own green transitions. So I think overall this is positive, and I would echo, what Anthony was saying. Not just the tariffs on the EVs, but tariff in general could elevate, inflation in the United States. A lot of credible research has shown that. It could also, slow down economic growth. Also slow down that economic green transition. We know that Biden has already walked back on the EV adoption, target, and Trump is very likely to completely scrap off that, EV adoption target. So I think this is concerning because the U.S. transportation does account for 30% of their carbon emissions, and so this is not going to be positive for the economy's green transition.
Yeah, Otaviano, I was in Lima in November for APEC, and of course also the inauguration of the Chancay port in Peru. And there was a lot of discussion there about, blueberries from Peru making it over to China and cherries from Chile, but also EVs coming into Latin America and kind of this two-way trade. And they were talking about, just the growth possibilities in the next year, 5 years, 10 years. Can you kind of map that out for us? What does that look like to you?
Well, I see, Mike. It is, I believe, the port as well as the other infrastructure projects that have been supported through the Belt and Road Initiative in the region. They will reinforce this sort of a complementarity between, on the one hand, the provision of basic commodities by Latin America, South America in particular, and China's manufacturing industry. You said the illustration of the EVs is quite well applicable. Brazil is now. You have the company, the Chinese company, replacing other companies in the occupation of the market in Brazil, and as well as the port itself shall be part of a highly integrated infrastructure of transportation in South America, facilitating the access to the Pacific and so on. Yes, this is, let's say, an investment that reinforces the kind of connections that South America and China have developed over the last decades. One should not lose sight of the fact that China is already the #1 destination of exports for all the countries in South America, and obviously something like the port, and China will obviously look for alternative markets as the protectionism against Chinese products, including EVs, will tend to be accentuated both in the U.S. and in Europe.
Yeah, and speaking of Europe, Einar, I'm going to ask you the final question, which is Europe. Of course, it's been a great trading partner with China. There's been some bumps along the way. Where do you see that going in 2025?
Well, a lot depends on what happens with Donald Trump. I don't agree with Anthony. I think politically he has to announce quite severe tariffs just to, follow through on his campaign promises. This could be very, very detrimental to Europe, which is already divided in the sense that the traditional powerhouses, France and Germany, are experiencing fairly severe economic downturns, whereas the rest of the Eastern Europe, which used to be the drag quote on the EU, are actually doing pretty well. But overall, Europe is a very difficult situation. And if they are pushed by Trump, they will start turning to other economies. And obviously, the largest economy would be to go back to the global south and China. So we'll have to see what happens, but a lot of political angst as well as economic angst, especially in Germany right now.
Let me ask you one final question, Einar, before we let you go. We heard some optimism on the part of Anthony that, maybe this is bluster. What's your sense as we get closer and closer to the inauguration as to what Trump is actually going to do?
Well, he's been backpedaling on a number of the issues he's talked about in terms of, I can solve everything in a day, and before I'm inaugurated, there'll be peace here, there, and everywhere else. I think you're going to see this going forward. I do agree with Anthony that if he does impose these tariffs, there'll be fairly swift reaction.
Okay.
70% of people. All right.
All right. Well, we've run out of time, unfortunately. I can't thank you enough. A great discussion with all four of you. Really appreciate it. We're going to have to leave it there. Thanks so much for watching another edition of The Heat. Have a great weekend.